Alright guys, so I'm gonna make this video um, showing how to trade NASDAQ and S&P futures. This would just be relevant to those who are switching over from Forex or other type of commodities, I guess, or whatever you do and want to trade futures. This video will just be showing on how to do that. So, for those of you that don't know, we have Asia and London market that happens before New York opening. When it's New York, we have obviously our AM session, we have a lunch session and a PM session that ends the day. So, because we have New York, I'll try and see if I can find an example. This probably isn't going to be a clean example for today, but with our recent price action, what do we see on NASDAQ? Because of our silver bullets or even our macros with New York, we would usually have, though, accumulation in Asia, or London would be manipulation. Well, right here is a prime example, really. So we had overnight news that caused us a huge run up. We had Asia was, in a way, our continuation. We had a huge spike up and a huge spike down. That's how you guys would see our manipulation. So right here, this would be our PO3. For those of you that know, we would have our London standard deviation for our New York distribution. So right here though, on a maybe on a 15-minute time frame, we have this. Oh, that looks a little bit messy. Don't worry about that. I can't really do anything on highlighting, so I'm just gonna use my mouse with what I'm pointing at, okay? So we have accumulation in this range. We had our leg up and our leg down. That was your manipulation leg. And then we would then expect our distribution. With New York, we had pre-market setting us up. If you guys see this in pre-market, what do we see? SMT. That right there would have just been your clear um, direction on where market open was going to be. Sometimes pre-market really does set up New York Open immediately. So this right here is an example. And because in pre-market, what do we want to target really? Because we had this as a swing point in London of our manipulation, we can assume that this would be our protected high. So we would not be targeting a London high. People definitely got faked out off of this SMT move, but we have to keep in mind that we have a bearish bias. So there would be no reason to go long at all, especially having London's leg up and quickly leg down into this swing point manipulation that doesn't usually get target. Um, and that part just really does depend on pre-market. Sometimes pre-market would uh, target a swing point and then make a higher time frame, like an external range, SMT or liquidity sweep. But mostly, in my perspective, SMTs are like the main confluence instead of liquidity sweeps. Um, just a higher probability, especially when you have an SMT inside of PD array, a higher time frame PD array. So that is something to have in mind. And what did we do in pre-market? near towards market open, instantly target Asia low as the drawn liquidity. But that is just a simple, calm, I don't know. Let me go in 1 minute. I don't know. So we have this market structure shift. Let's say I enter it immediately. Fuck. Don't mind these marks. So we have this inversion right here, a 1 minute inversion. Let's say I enter on here and target Asia's low. That would have just been a calm 1 to 4. But if you're confused on why the market went even lower, take in consideration we had this new day opening gap and other previous PDRAs that were aligned. That is something to take into consideration. That would be your overall drawn liquidity. If we see previous sessions aligned with a high time frame PDRA, you can have partials for the previous session lows, and final TP will be at the PDRA. Most likely CE point of that. CE point means constant something equal something. Basically just point 0.5. That's why in fair value gaps we have a line in the middle. This is my CE point. This is usually a target for entries or stop loss with that. So you have to follow the narrative with how everything is on the higher time frame. It all makes sense the way market opens. Um, so if you guys take a look, we'll go on an hourly time frame. If you guys take a look, we can see that most of the big movements of the days is in New York. We have you guys can see the highs and lows of Asia on this 1 hour time frame. And I know it might seem a little bit messy because I have other opening pricings marked up on here, but actually I'm gonna go ahead and change one of them, to be honest. All right. For those of you that want to know what this indicator is, this would just be your ICT kill zones and pivots. This is what would give you. You would have to customize it a little bit for your liking, but this would simply give your highs and lows so you don't manually have to go ahead and find it at the right time. So, but yeah, you guys can see how small the ranges are, especially for Asia, and the huge movements are most likely going to be in New York. Why is that? Is because New York at that specific time we have macros. What are macros? Macros is when we have an hourly, 15 minutes, every single time frame, even the 4 hour, up to the 4 hour. Uh, those candles close all at the same time. So if we have a higher, especially a higher time frame candles closing, what do we expect price to do? Quickly rush over to its closing price. Usually, with that volume and that volatility that we have in market, we would expect our macros, which is again 950 to 1010, to hit the clear drawn liquidity a lot quicker than trading Asia. Looking at our drawn liquidity right here would have been our PM session. So again, for Asia, what we target is mostly just previous session highs and lows. Same thing for London and etc. Whatever session you guys trade, you would most likely target the previous lows and highs. I mean, that should just be common sense, right, guys? But trying to figure out what else I can show you on how to trade macros. I mean, it's pretty simple. Usually, most of the time, uh, when there's New York AM traders, all they trade is macros, and that is just 950 to 1010. That's where your volatility would come in, and your TP or stop loss would get hit a lot sooner. As you guys can see, though, on this 5 minute time frame, still in this range, basically. This was also during FOMC hours. For those of you that saw my recent TikTok, I was able to top tick entire FOMC leg, and apparently we had a huge reversal after. I did not catch that long. I did see that long happening as a potential, but I already made 2.5 on that day on that trade, so that was one mini. Kind of poorish price action overall to show just on the. Well, I can go ahead and show this. So we probably had a SMT down at the lows or hit a key level. We had. You guys need to pay attention once we hit key levels, the candle's reaction. So as you guys can see, this is a doji candle, or we just had a huge wick with the body. I mean, some people say like wicks do the damage, bodies tell the story. Ideally, I would only listen to that on how we hit key levels. Same thing right here. We hit a key level, which would just been AM low. And what did price do? We couldn't displace. That's all I'm really talking about is displacement. Basically, if we had any body closure below um, this swing point, vice versa on the highs. If we create a wick or a doji showing no displacement, we showed no displacement 2 times. So this one would have been liquidity sweeps then with no displacement, or possibly an SMT. Doesn't look like we had a SMT. Oh shit, I accidentally deleted my. Hold on, I need to go back. I got rid of my indicator. Okay, my indicator is back now. Let me go back on the 5 minute time frame. So focusing again on macros. Um, like I said, around 550 to 1010. What do we see on a 5 minute time frame? Obviously, we see this reversal happening. So a lot of traders probably on a lower time frame. I don't use 1 minutes. We see our candles reaction on the lower time frame, small consolidation. We have our order block right up here. Price didn't really hit any inverse. I probably wouldn't have been able to get this trade. So this right here is kind of a poor setup on how macros was going to be, in my opinion. But 950 is macros, which starts right here with all candle closure mints. Never mind, I can't mark anything right now. With all the candles closing, what do we see here? Macros faked everyone out with the shorts. that wanted to inverse off of this, but we didn't. And then we slowly but surely started to see price go back up into an internal range, which would have just been this PDRA right here. Or you could have held at this swing point. This was very, I wouldn't even trade this at all, to be honest. Especially if I had to go on a 1 minute just to find an entry. That's not what I like to see personally. But we do have this order block, and what did price do? We just retapped into it, respecting it, and having our continuation. This right here would have been, I forgot, I can't mark anything. This right here though would have just been a calm 1-to-1, I guess. When we have PM session that opens, we usually have it around 1:30. Around 2:30 is where we start to get all volume and more momentum. As you guys can see here, around 2:30 we're setting price action up, and then later on start to just simply consolidate in this range. But that's because it was a Friday, so we just have our open high, low close happening at this time. Um, can't think of anything else right now, but this is how to trade New York session using macros and what you should use to target for your drawn liquidity. You guys need to focus on the high time frame narrative because, like I said, sometimes we're not going to just target these highs and lows immediately, especially with what price action was doing throughout this week. So on a Friday, usually you can get good setups, but today or last week, last week's Friday, we did not have, in my opinion, pretty good price action. Um, doesn't mean though that we would have. So since we have market close right here for the week, and we have all of this liquidity and imbalances on a higher time frame, what do we most likely want to see market to do? I'll leave that up to you guys. But if you guys have any questions on timing and where to enter at, if you're gonna trade futures, uh, I would do what mostly everyone does in the market is waits for New York market open to trade all that volatility. It's just a quicker way to hit your stop loss or TP um, with the volume that we have. Or you can, trade London and have these type of candles slowly but surely go towards your TP. So, and as you can tell, our candles are a lot bigger than other previous sessions because of the volatility that we have inside New York opening and going into macros. So, but yeah, if you guys have any comments on how to do anything with futures, feel free to comment down below. I can go ahead and if there's enough context to it, I can possibly make a video for you guys on that. But this is just something pretty small, pretty quick for those that are transitioning from other pairs, um, like Forex mostly, uh, going to futures for those of you that are interested in trading futures. But if I can give this information out as well or advice, if you want to trade futures, always have a correlated pair. Other than that, in my opinion, I think you're just blindly trading one pair without using the other. Doesn't mean you have to mark out every single highs and lows with the other pair as well. You don't have to. But the reason why that I say to trade with another pair is if one pair ends up sweeping a high and the other pair lacks sweeping that, that then is what creates our SMT. That then is what I say revolve your trades around when you see a high time frame SMT or an SMT in a PD array. That will give you your highest probability in that trade So why not revolve your trades based off of a SMT? That is the only time you really need to trade with the multiple pairs. You can main NQ, and all you need from ES is to make sure that we sweep both highs, or to make sure that one creates an SMT and then we can start to execute. But other than that, that is basically all you need. You don't need to do any other things complex. Whatever you do on NQ, it doesn't mean you have to set your analysis on ES, just highs and lows. Um, it's mostly what you're focusing. Any kind of liquidity sweep that was on one pair and the other pair lacks. That is also when you can find your lagging pair for the day or for that moment. And that's up to you guys if you want to trade that or not. I can be uh, kind of mixed on both. Sometimes I trade the leading pair, sometimes I trade the lagging pair. What I realize that works for me is most of the time the lagging pair is a little bit more favorable, but that's just how my edge works with everything. So, yeah, I'm just gonna leave that for that. So, I'll catch you guys in the next video. Feel free to like and comment and subscribe.